Hello there, all you smart investors, and welcome to Smart Dollar Resource, your go-to place for all things related to investing and wealth creation. We're thrilled to have you join our community. We can't thank you enough for your support, and we're excited to share today's topic with you. Today, we're diving into Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor by John C. Bogle, a must-read for anyone interested in making their money work harder. This book is a goldmine of insights, and today we'll be exploring some of its key takeaways. But before we get started, if you haven't done so already, please hit that like button and subscribe to our channel. It really helps us out. Stay tuned as we dive into the depths of this enlightening book, and don't forget to check out the links in the description box. So, what's this book all about, you may ask? Well, let me tell you. Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor by John C. Bogle is a comprehensive guide to the world of mutual funds. It's not just about the nuts and bolts of this investment vehicle, but it also delves into the philosophy and strategies that guide successful investing. The book is built around the principle that simplicity and long-term focus are key to successful investing. Bogle emphasizes the importance of low-cost index funds, which are designed to mirror the performance of the market as a whole, rather than trying to beat it. He argues that, over the long term, most actively managed funds fail to outperform the market, often due to high costs and fees. But it's not all about index funds. The book also explores the broader landscape of the investment world, from the role of speculation and risk to the impact of market trends and cycles. It provides a roadmap to understanding mutual funds, demystifying complex concepts, and cutting through the jargon that often surrounds investing. Perhaps one of the most valuable aspects of the book is its emphasis on the psychological aspects of investing. Bogle explores the role of emotions in financial decisions and offers strategies to avoid the common pitfalls that can derail even the most carefully laid investment plans. Like every other thing in life, this book has its pros and cons. The beauty of Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor by John C. Bogle lies in its simplicity. It breaks down complex financial jargon into layman's terms, making it incredibly accessible for beginners. The book is filled with practical advice and strategies, backed by Bogle's wealth of experience in the investment world. This makes it a valuable guide for anyone looking to navigate the often turbulent seas of the stock market. Furthermore, Bogle's emphasis on long-term investing is a breath of fresh air in a world that often glorifies quick, high-risk trades. His philosophy, that patience and consistency are key to growing wealth, is a standout pro. It encourages readers to adopt a more sustainable approach to investing. However, while the book is rich in content, it can be a bit overwhelming for absolute beginners. The volume of information and the depth of some topics might seem daunting at first. This is not a book you can breeze through in an afternoon. It requires time, patience, and a fair bit of contemplation. Another potential downside is its focus on mutual funds. While Bogle provides a compelling argument for why mutual funds can be a solid investment choice, it's important to remember that they're not the only option out there. The world of investing is vast and diverse, and it's crucial to explore all avenues before making a decision. Furthermore, while Bogle's long-term strategy is sound, it's not for everyone. Some investors may prefer a more hands-on approach, with frequent trades and immediate returns. Bogle's method requires patience and a tolerance for slow, steady growth, which might not align with everyone's financial goals or personality. But remember, no strategy is foolproof. It's all about understanding the risks and rewards. Whether you agree with Bogle's philosophy or not, his book offers valuable insights into the world of investing. It encourages readers to think critically about their financial decisions and to always keep their eyes on the long-term prize. Now that we know what the book is about and its pros and cons, how can we use this knowledge to our advantage? This question brings us to the crux of why we read books like Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor by John C. Bogle. We're not just reading for leisure or to pass the time. No, we're reading to gain valuable insights that we can apply to our financial lives. So let's dive into how we can take the knowledge from this book and use it to our benefit. First, we need to understand the function of the book. Bogle's work is not merely a guide to mutual funds, it's a comprehensive exploration of the principles of investing. It sheds light on the importance of long-term, low-cost investment strategies and the pitfalls of chasing after short-term gains. But understanding is just the first step. We need to take this knowledge and apply it. And how do we do that? Well, we start by taking a hard look at our own investment strategies. Are we chasing after the latest hot stock, or are we investing in low-cost, diversified mutual funds for the long haul? Are we trying to time the market, or are we consistently investing a portion of our income regardless of market conditions? Bogle's book provides us with a roadmap. It shows us the path to long-term financial success, and it's up to us to follow it. Next, we execute. We take action. This might mean shifting our investment strategy, or it might mean sticking to our current strategy with a renewed sense of confidence. Either way, the key is to make our decisions based on knowledge, not on fear or greed. Let's remember, investing is not a game of chance. It's a game of skill and knowledge. The more we understand about the principles of investing, the better equipped we are to make sound decisions. And that's where common sense on mutual funds, new imperatives for the intelligent investor, comes in. Bogle's book empowers us with the knowledge we need to navigate the world of investing. It helps us understand the importance of staying the course, of investing for the long term, and of avoiding the pitfalls of short-term speculation. So let's take this knowledge and use it to our advantage. Let's use it to make informed decisions, to build a solid investment portfolio, and to grow our wealth over time. Remember, knowledge is power, and in the world of investing, that power translates into financial success. With the right understanding and application, you can use these strategies to grow your wealth. So let's dive into the lessons from the book in the next scene and see how we can apply them to our own financial journey. Let's delve into some key lessons from the book. Firstly, we learn the importance of long-term investment. John Bogle emphasizes that the stock market is not a casino but a market. And like any market, it has its ups and downs. But in the long run, it has always been up. So instead of trying to time the market, which is often a fool's game, invest for the long haul. The second lesson revolves around understanding the impact of costs. Bogle is a firm believer in low-cost index funds. He points out that the higher the costs of mutual funds, the lower your returns. This is because these costs eat into your returns. So always be mindful of the costs associated with any investment, and remember, every dollar spent on fees is a dollar less in your pocket. Thirdly, the book underscores the significance of simplicity. In a world awash with complex financial products, Bogle advises us to keep things simple. Stick to broad-based, low-cost index funds. They offer diversification and keep costs low. As Bogle puts it, don't look for the needle in the haystack, just buy the haystack. The fourth lesson is about the power of compounding. Bogle illustrates how the magic of compounding can work wonders for your investment. It's not just about making money on your investment, but also making money on the profits that your investment has already made. This is why starting early is so crucial in investing. Lastly, the book teaches us about the role of emotions in investing. Bogle reminds us that fear and greed are the investor's worst enemies. When the market is booming, it's easy to get greedy and take unnecessary risks. When it's crashing, fear can lead us to make rash decisions. Bogle advises us to stay the course and not let our emotions dictate our investment decisions. These lessons are stepping stones to becoming a savvy investor. And that's it, folks. That was our dive into common sense on mutual funds. We've taken a journey together, uncovering the wisdom of John C. Bogle, exploring the pros and cons of his approach, learning how to leverage this knowledge, and teasing out 5 key lessons from his seminal work. Bogle's book is a beacon, illuminating the path to wealth creation in the stock market. It's about understanding the market, not fearing it. It's about embracing patience and consistency, not getting swept up in the winds of market trends. It's about having the courage to start, even if you're a beginner, because as we discussed, everyone starts somewhere. And this is not the end of your journey, it's merely the beginning. There's a whole world of resources out there waiting for you to explore. And we've made it easy for you. We've curated a selection of these resources and linked them right in the description box below. There, you'll find a link to purchase Bogle's book, if you haven't already. You'll also find a link to sign up for MooMoo, a broker app that's perfect for both beginners and seasoned investors. And here's the cherry on top. When you sign up for MooMoo today, you'll have the chance to win an Apple stock, currently valued at up to $190 depending on the market price, plus up to 10 free shares. So don't hesitate. Take that next step. Remember, knowledge is power, and with the right resources, you can unlock that power for yourself. Thank you for spending your valuable time with us today. Don't forget to like, subscribe, and share your thoughts in the comments. Your engagement helps us create better content for you. And most importantly, it gives us the opportunity to learn from you, because the journey to financial literacy is one we're all on together. So, let's keep the conversation going. Until next time, happy investing.